let's start the session now. So today we will discuss a pre-mock December 24 paper. Pre-mock December 24 paper. Okay. So we'll be discussing section C of it. We won't discuss section A and section B because you can very well verify your answer if section A and section B. Okay. In the ACCA practice platform. In the ACCA practice platform, you can very well see that. Okay. But section C, students are not able to review whether their answers are right or wrong. So we will discuss section C. Now, Gaurang is saying, please don't explain with journal entries. Guys, understand that the journal, if we explain with journal entries, okay, ACCA is also recommending you to understand the journal entries, the accounting entries, okay? If you want me not to explain with the journal entries, then we are not following the approach recommended by the ACCA examining team, okay? And then you will make mistakes in the exam. So we will definitely go as per the right approach which the ACCA examining team wants us to follow. Okay. So we will go as per the correct approach. But yes, if you face any difficulty in any part of the topic, you have to let me know and definitely I'll explain using different approach also. Now understand section A, section B, section C. We are discussing here section C. In section C, you need to be careful about few things. Generally, what I have seen students making a mistake. Okay, what I have seen is students making a mistake is they read the introduction paragraph. They read the introduction paragraph. Okay, now what is the meaning of introduction paragraph? I will go to a question and show it to you. Okay, so now this is the introduction paragraph. This first line is the introduction paragraph. So they read the introduction paragraph, then they read the entire case scenario, and then they read the requirement and then try to answer. Guys, this is not the correct way of solving the question. This is not the correct way of solving the question. Then comes the question, what is the correct way of solving? So read the introductory paragraph, identify the reporting date, highlight the reporting date, go to the requirements, read the requirements first. First of all, read the requirements and then come to the case scenario and write the answer that follow. Okay, so why I'm suggesting this approach? Why I am recommending you to use this approach? Basically, if you read the requirement first, what will happen is your mind will get a direction. Okay, what exactly I need to find? What exactly do I need to find in the given scenario? What exactly do I need to find in the given case scenario? Okay, so now if you know what exactly you need to find in the given case scenario, your life will become quite easy. Okay, it will become quite easy a task for you to find out that thing in the scenario. But if you read the scenario without any direction in the mind that what exactly do we need to find, then you are reading the scenario baseless. The reading of scenario become baseless and the time that you invest in reading the scenario gets wasted. So what you have to understand is read the introductory paragraph, then read the requirement, and according to the requirement, read the case scenario and answer the questions that follow. I believe you have understood this approach, all of you. Okay, so now let us solve this question now. So this question says a Mervyn company has a draft trial balance at 31st December 20x8. So the trial balance is given. There are certain adjustments that are given. Now understand, these adjustments are linked to the trial balance. See, property, plant, equipment, refer note 1. So this note 1 is for the adjustments linked to PPE. Then factory costs, adjustments linked to note 1. So note 1, these adjustments is linked to PPE and the factory costs. Then come here, revaluation reserve note 2. So this adjustment number 2 is pertaining to revaluation reserve. Then if you go down, Provision for warranties note 3. So there is a adjustment for provision for warranties note 3. And then coming to 4, inventories 8620. This is note 4. This is note 4. So this one is for inventory. So we have 4 adjustments given for these items. So now guys, you need to understand all the entries which are there in the trial balance, means they have already been accounted for. So when you are solving the questions, okay, so basically what I'm trying to say, when you are solving your question of this part, statement of financial position, okay, so understand, whenever you are solving your question, the entries in the trial balance, the line items in the trial balance will be adjusted one time, okay, and the adjustments which are there, since they have not been accounted for, they will be adjusted 2 times. Okay, we have to take care of it 2 times. Okay, so always remember this point, okay. Invictus is saying, sir, why don't you use Hindi for explaining things? See, when it comes to our regular classes, we do have option for Hindi and English both. But when it comes to sessions on YouTube, I understand that since we have to write our exams in English language, we do understand, all of us understand English, right? So it becomes easier for me to explain things in English, because if I am posting English language, it can be clearly understood by both the persons who understand English and who understand Hindi, right? So both the persons can understand this part. But if it comes to our regular classes, we have to have the options in both English and Hindi. Okay, so let us focus on the concepts now. I am using a bare simple Hindi, simple English for everyone to understand. Now, so this is the requirement. Coming to the question, back to the question. Okay, explain how the discovery, this is a requirement number 1. Explain how the discovery of inventory defects would affect the financial statements of Mervyn Company for the financial year end. Okay, how the discovery of inventory defects would affect the financial statements of Mervyn Company for the year end 20x8. So now we have to find out what is the adjustment relating to inventory. So we just now saw, right, inventory, the cost of inventory is 8620. So now the adjustment of inventory is in note 4. In note 4 it says in February 20x9. But what was the reporting date? 31st December 20x8, meaning thereby it is talking about events occurring after the reporting date. See, my reporting date was 31st December 20x8, but now it is talking about February 20x9. So in February 20x9, prior to the financial statements being authorized for issue, okay, so the reporting date has got over, but the financial statements has not yet been authorized now. Okay, means not yet been signed by the auditors and the CFO of the company. Now it says Mervyn Company determined that some of its inventory produced in December 20x8, okay, inventory which was produced in December 20x8 had manufacturing defaults. Okay, taking into account the total net realizable value of the inventory at 31st December 20x8 was determined to be 6 million. Basically, the inventory, the NRV of the inventory is 6 million. None of the damaged inventory has been sold out. So basically what we have to do, so we can see the inventory had a cost of 8620 and we can see the inventory has an NRV of 6 million. So what we will do, so we record the inventory at lower of cost or NRV as per IS2 on inventory, as per IAS2 on inventory. So we will record the inventory at $6 million, and the difference of 8620 minus 6000 will be recognized in P&L as decline in the value of inventory, So how will we write our answer for this? So we will write as per IAS 10 on events Sir, do we need to write the standard number in the exam? No, not required. You want me to erase it? I can erase it off. Leave off. As per standard on, as per accounting standard on, as per accounting standard on, events after reporting period, okay, the events are classified after reporting period, but before the financial statements are authorized for issue, are classified into two types. That is adjusting events and non-adjusting events. Okay, non-adjusting events. Now, events whose conditions exist on the reporting date and provides confirmation subsequent to reporting date are adjusting events, okay, and rest all are non-adjusting events. Then right, in the given case scenario, since inventories were produced before the reporting period, before the reporting date, hence condition existed on reporting date, okay, and this becomes an adjusting event, okay, following the principles of IAS 2 on inventory. Again, do we need to write the standard number? No. Following the principles of inventory, I'll write here, following the principles of inventory, okay, it is measured at lower of cost or net realizable value. Cost as per trial balance is 8620 and NRV is equals to 6000. Therefore inventory will be valued at 6000 and the difference of 2620 will be recognized in P&L. So this is what you have to write. Tell me, is that clear, everyone? Okay, now, so moving on to the next adjustment, next requirement. So what is the next requirement? The next requirement says, see, take things one by one. Okay, this way the question will appear to be easy if you take things all at one time. See, if you read the entire adjustment at one time, it will appear too much bulky and you won't be able to answer. You will just think, oh, it is too much lengthy a question, I am not able to answer. Take things one by one, it will appear easy. Now, prepare a schedule of adjustments to the draft profit listed in the trial balance. taking into account the additional information in the notes 1 to 4. In the notes 1 to 4. So now what happens? Just see here. So what I will do, definitely we need to account for the notes 1 to 4, but before that what I will do is, now in this question is asking you to account for the impact of 1 2 3 4, all these notes. So now is the time that we need to go through these adjustments. Okay, now Hamad wants me to go back to the previous question, guys. Okay, I am going it once, but you can just see. If you have any queries, you can ask me, Hamad. If you have any queries, you can ask me. Okay. If you want to take a screenshot of the answer, you can do the same. See, this is how you have to write in the exam also. This is how you have to write in the exam also. This is how you have to write. See how, like, my answer is quite very much neat and the clean. So first of all, I wrote the provision of the standard, then I wrote my analysis, and then I gave a conclusion towards the end. It's quite very much simple an approach that we have to follow. Moving on to the next question. Okay, now, so what we will do is, now we will go through the adjustments. But what is the question saying? Prepare a schedule of adjustments to the draft profit listed in the trial balance, taking into account the additional information in the notes 1 to 4. Can you see draft profit? 4500? Yes, we can see. Okay, yes, we can see that. Okay, Ruchi is asking me a query. I really want to take up that query. So Ruchi is saying that, sir, under what head this cost will go to P and L? Now tell me. So when we decrease the inventory, what will happen? To inventory, journal entry, to inventory, right? To inventory. Now closing inventory gets reduced. So what will happen? If the closing inventory gets reduced, your cost of sale increases. So cost of sale increases, debit. And this will be credit by what amount? 2620. Is that clear, Aruchi? Are we required to give this journal entry in the exam? Not required. Okay, because the question was asking explain. So just explanation till here is fine. We are not required to give the journal entry. Okay, just for the sake of your query, I have passed the journal entry here. Otherwise, not required. Is that clear, Ruchi? So in pre-mock December test, we are having single entry questions. So is there any high chance for getting single entry question in exam also? Miss Diksha, there is no such high chance. There's no such high chance. They make multiple sets of paper. In one set, they will ask single entity and interpretation. In other set, they might ask group FS and interpretation. Which set are you getting? How will you know that? Okay, now Lucky is asking, sir, if in case my paper in the last part when I'm solving section C, in that case, how many marks can I score in that case? So understand, Mr. Lucky Singh, in section C, I always tell you, first of all, work on the adjustments. First of all, give all the working notes. Why? Because if you have given all the working notes and not prepared SOFP or not prepare P&L, then also you can score 13-14 marks. Okay, then also you can score 13 to 14 marks. So first of all, give adjustments, and then at the end, towards the end, you draw SOFP or P&L, whatever it is. Okay. Now moving on to the next part. Yes. So prepare a schedule of adjustments to the draft profit listed in the trial balance, taking into account the additional information in the notes 1 to 4. Okay. Now, Ruchi, I will explain that part also. Don't worry. Towards the end, I will prove my point. Towards the end, I will prove my point. Don't worry. Okay. So now, what is a draft profit? 4,500. So the draft profit as per trial balance, the draft profit as per trial balance is what? Tell me. It is what? 4,500. It is what? 4,500. Right now we have to make the adjustments. Now we have to make the adjustments. Adjustment number 1 I will do. Adjustment number 1. Okay, it is pertaining to PPE and factory costs. Mr. Krishna Darji, please understand, if I am solving a question, focus on that question first of all. Focus on that question, please. It's a request. Okay, if you see, I will not be discussing section A and section B now. If in any particular question of section A and section B you have query, you ask me over WhatsApp, I will explain it to you. Okay, in this session I will take only section C, and I will sincerely request you to please focus on section C with me, because if you keep on focusing on question number 1 and question number 2, what I am discussing now might get missed. Okay, no need to be sorry, my dear friend. Focus on this one. Okay, I am here to help you guys in any manner possible. Okay, whatever is possible for me, I will do everything for you guys. Okay, but please focus with me. Now, adjustment number 1 says Mervin Company has been constructing a second factory on since 1st January 20x7, means from the beginning of the previous year. See, what is my reporting date now? 31st December 20x8. But since when I have been constructing the factory? From 1st January 20x7, means from the beginning of the previous year I am constructing a second factory. Now, on 31st August 20x8, the construction of the factory was completed, and at this date, it was ready for immediate use. It was ready for use. See, whether we started using it or not doesn't matter, but it was available for use. It was available for use. At 31st December 20x7, the carrying amount of the factory under construction was 8 million. The cost that we incur in the current year, when we say current year, what does it mean? Current year means 1st January 20x8 to 31st August 20x8. Because see, I'll explain in my notes too. I'll explain here. Just give me a minute. I'll explain it here. Can you see my notebook? Can you see my notebook? Can you please confirm if you can see my notebook, guys? Can you please confirm if you can see my notebook? All of you, can you please confirm, guys? Notebook and the pen, can you see? Very good. So now it says that the construction of the factory started on 1st January 20x7. 20x7. Okay, now my reporting period is 31st December 20x8. Now, so it is talking about 2 years. Now the construction started from this date and the construction ended on 31st of August 20x8. Now question says that during this period we incurred 8,000. We incurred 8,000. Okay, we incurred 8,000. And okay, now from in this period we incurred 7,500. So this is the cost that we have incurred. This is the cost that we have incurred. Is that clear, everyone? Is that clear, everyone? Now, again, going back to the question so that you can see the question also. Now, if you see the question, it says Mervin Company has been constructing a second factory since 1st January 2007. On 31st August 2008, the construction of the factory was completed, and this date it was ready for immediate use. At 31st December 2007, the carrying amount of the factory was 8 million. So if I convert this figure into thousands, it becomes 8,000. The cost incurred in the current year is 7,500. All the above cost has been recorded in factory costs account above in the trial balance. Factory cost account in the trial balance. Now, tell me, if I am coming back to my notes, can you understand what I am trying to say? Can you understand this diagram? Can you please confirm if you can understand this diagram? Is this diagram clear to all of you? Please confirm, guys. Now the question says that out of 7,500 which I have incurred, out of 7,500 which I have incurred, what is the breakup of it? So the material is of 5,000, directly attributable overhead is 2,000, and admin overhead is 500. Admin overhead is 500. Now tell me, applying the principles of IAS 16 on property, plant and equipment, is there any cost which you think should not be capitalized? Is there any cost which according to you should not be capitalized to factory, should not be capitalized to the cost of the asset? Yes, in my opinion, this admin overheads cannot be capitalized. This admin overhead cannot be capitalized. This should be transferred to P and L. This should be transferred to P and L. Is that clear, everyone? This admin overheads, because in my classes I have told very specifically. See, I have posted FR ka entire revision in 8 hours. FR ka entire revision in 8 hours. I've already posted that video, last attempt itself, right? So in that I have discussed all these things in very much detail. Okay, so now what I told, if there is any directly attributable overheads, yes, we can capitalize, but admin overheads we cannot capitalize. Admin overheads we cannot capitalize. Okay, so it will be recognized in P and L. It will be recognized in P and L. Now coming back to the question. So see here. So what I will do, I will reduce from here. I will reduce from here. So right here, factory costs, admin overheads, factory costs, admin overheads, Okay, adjustment number 1, A1. So minus 500. Is that clear, everyone? Tell me. Is that clear, everyone? Tell me, guys. Okay, now, so this is sorted. Now, rest all cost can be capitalized to the cost of inventory. Now, what does it further say? An specific loan of 18 million was obtained in 20x7. In the previous year, we have obtained a loan of 18 million to fund the construction of the factory, and it carries an annual rate of 10.5%. So it's a specific borrowing. A specific borrowing of 18 million we have taken in 20x7 to fund the construction of the factory at a rate of 10.5%. The loan was still outstanding at 31st December 20x8. All the interest on the loan has been recorded as an interest expense in profit and loss for the period. The interest expense, all the borrowing cost which is incurred is recorded as interest expense in the period. Now come here. So tell me, first of all, what is the borrowing costs? What is the borrowing costs recognized in P and L? What is the borrowing cost recognized in P and L? Tell me. What is the borrowing cost recognized in P and L? Tell me. So it will be equals to, understand, 18,000 multiplied by 10.5% multiplied by 12 by 12, right? For the entire year. This is what is recognized in P and L. This is what is recognized in P and L. I will reduce the size. This is what is recognized in P&L. But understand, we need to understand, out of this borrowing cost that we have recognized in P&L, don't you think there is a borrowing cost? There is a borrowing cost that should not be recognized in P&L, rather it should be capitalized to the cost of asset. There is an amount of borrowing cost that should not be recognized in P&L, rather it should be capitalized to the cost of the asset. From which period to which period? From 1st January 20x8, from 1st January 20x8 till 31st December, till 31st August 20x8, till 31st August. Why 31st August? Because the construction of the building got completed on 31st August. So from 1st January 20x8 till 31st August 20x8, we will capitalize it to the cost of factory, right? So what we will write here? A1, okay, borrowing costs, capitalized, borrowing costs to be capitalized. So what is the amount of borrowing cost to be capitalized? What is the amount of borrowing cost to be capitalized? What is the amount of borrowing cost to be capitalized? So it will be equals to 18,000 multiplied by 10.5%, multiplied by how many months? Tell me. Multiplied by how many months? Tell me. From January to August. So January, February, March, April, May, June, July, August. How many months? 8 months. So into 8 by 12. Now understand. My question is, what shall we do here? Plus or minus? What shall we do here? Plus or minus? So understand, we have adjusted the entire amount of borrowing cost in the statement of P&L. Okay, meaning thereby the profit of 4,500 is after deducting all the borrowing cost. But ideally, sir, all the borrowing cost should be recognized in P&L. Kya? No. A portion of the borrowing cost should not have been recognized in P&L, rather they should have been capitalized to borrowing cost. So we have to remove the cost from P&L. We have to remove the cost from the P&L. So we have to remove the expense from the P&L, which will increase the profitability, of the company. So we have to add this amount here. We need to add this amount here. So let me copy this one, copy, and then is equals to plus this, done. 1260. Is that clear, everyone? Is that clear, everyone? Tell me, guys, please. Come on, tell me. Is that clear, everyone? Hamad, you understood where you made a mistake? Hamad, did you understand where you made a mistake? Okay, very good. Now coming back to the further adjustments. So this part is done. Now depreciation of the factory. To calculate the depreciation of the factory, so first of all we need to know what is the carrying amount of factory work in progress on 31 December 20x7. Factory work in progress on 31st December 20x7. It was 8,000. Okay, capitalized in 20x8 is how much? 7,000. Okay, now borrowing costs capitalized. What is the borrowing cost that we capitalized? So just now we calculated 1260 is the borrowing cost that we capitalized. So what is the total cost of factory? At 31 August 20x8? What is the total cost of factory? So this is the cost incurred. This is the borrowing cost that we capitalized to the cost of the factory. Now what is the total cost? So it is equal to this plus this plus this. So it is 16260. Now we depreciate the building over 20 years. We depreciate the building over 20 years. No entries have been made in respect of factory for this one. So now we have to account for the depreciation. We have to account for the depreciation of the factory. So now how will we depreciate? So depreciation will be 16260 divided by 20 multiplied by how many months? Tell me. August done. September, October, November, December. 4 months. 4 months. So into 4 by 12. Into 4 by 12. Okay. Do one thing. Copy. This is 271. So this should be a negative figure. Depreciation, no, it should be negative figure, minus. So it's minus 271. So what is the value of factory on 31 December 20x8? It will be equals to this minus this. 15989, right? So this is the value of factory on 31st December 20x8. So what will happen now? Again, I will write A1, depreciation of factory. Depreciation of factory by what amount? Minus 271. Why minus? Because this depreciation expense was not recognized. So I have to recognize an expense. I have to recognize an expense. Are you understanding this point? Tell me. Are you understanding this point? All of you, come on guys, tell me. These 3 points are coming from adjustment number 1. Is adjustment number 1 clear to all of you? If you have any query in adjustment number 1, please do ask me. I will explain you. I will explain you. But tell me, is that clear to everyone till here? Very good. Now I am moving on to adjustment number 2. Now I am moving on to adjustment number 2. Adjustment number 2 is for revaluation reserve, right? So I will write here revaluation reserve. Now let's see what is happening here in adjustment number 2. So in adjustment number 2, the question says the revaluation reserve relates to Mervyn Company's head office. Okay, fine. So now I believe you know the revaluation reserve is asset specific. The revaluation reserve is asset specific, meaning thereby revaluation loss of an asset can be adjusted from the revaluation reserve of that asset. We can't knock off revaluation gain of one asset with revaluation loss of another asset. No, we can't do that. Revaluation gain or loss is asset specific. Okay. Now the revaluation reserve relates to the Mervyn's Company head office. At 1st December 20x8, it was discovered that the head office has been damaged due to the storm, resulting in an impairment loss of 2 million. Okay, Fazin has a query. Does the loan was the loan taken for 2 years? The question is not specifying. In 20x7, when we have taken the loan, the question is not specifying us. Okay, question is not specifying that in 20x7 we have taken the loan at the beginning of the year or at the end of the year. So you can write an assumption and solve this question. Okay, so far we have not. Okay, let me see anything given in the question. Loan is 19890 is 19890. Note 1. 18 million into 0.105 plus 18 is 1989. Yes. So the loan interest is payable for 1 year itself. So I'm assuming, see why I'm telling you for the 1 year is my loan was, understand, Farzin, you have a very relevant query. That's a very relevant query. So is loan is obtained in 20x7. Okay. Now what happens here? See, the loan we are recording at 19890. So how did we arrive at this figure of 19890? It represents a loan of 18 million plus the finance cost of 1 year, plus the finance cost of 1 year, that is 18 million ka 0.105%, that is 10.5%, that comes to 1.89, plus 18 comes to 19.89 million. Okay, so this is what is coming. So we are assuming with the help of this calculation that the loan has been taken at the end of previous year. Okay, loan has been taken at the end of the previous year, end of 2007. But understand, you won't be wrong, if you understand, if you assume and give an assumption that the loan has been taken at the beginning of 2007. But you have to write your assumption accordingly. Unless the question specifically mentions otherwise. If question specifically says that loan is taken at the beginning of the year, end of the year, then definitely we are required to use the same. But if the question is silent in the same, you can take your assumption and solve the question. Is that clear, Farzin? Okay, now revaluation reserve. The revaluation reserve relates to Mervyn Company's head office. At 1st December 2008, it was discovered that head office has been damaged due to storm, resulting in an impairment loss of 2 million. Now tell me, impairment loss of 2 million. What should be the treatment? Tell me, what should be the treatment? What SHOULD should be the treatment? Correct treatment. What should be the correct treatment? Tell me, what should be the correct treatment of impairment loss of 2 million? Okay, now understand. So for this head office, we have a revaluation reserve of 1600. So what will we do? We will record a revaluation reserve. First of all, we'll adjust with revaluation reserve. Revaluation reserve debit the correct treatment. Then 1600. Your asset will decrease by 2000 to asset to head office asset to PPE, that is credit. Your asset will decrease by 2000. Your PP will decrease by 2000. But now what happens is the rest will go to P and L debit 400. This is the correct treatment that should have been done. But what they have done, just see here. This has been included in the calculation of draft profit before tax and is reflecting in the carrying amount of the property, plant and equipment. So now what is the wrong treatment given? The wrong treatment given is this one. So we have taken the entire amount to P&L. Then what should be the rectification of it? So understand, transferring to P&L, see, PPE is correct. PPE should be reduced by 2000 is correct. This is not wrong. Okay, there is no challenge in PPE. But P&L we should debit by 400, but we are debiting it by 2000, which is wrong. So what I will do is I will debit revaluation reserve by 1600 and credit P&L to P&L credit by 1600. So this should be the rectification entry. Okay, now so what will I do here? In this adjustment A2, I will write here impairment loss. Okay, to OCI, impairment loss to revaluation reserve, adjusted from revaluation reserve. So what I will do, I have recognized an expense in P&L of 1600. So I have to reduce the expense in P&L. Means my profit should go up by 1600. Is that clear, everyone? My profit should go up by 1600. Now further it says depreciation on the head office has been calculated and recorded correctly. Why depreciation recorded correctly? Because the PP balance was correct only, na. So depreciation is correct only. Mervin company does not transfer from revaluation reserve to retained earnings. So there is no annual transfer that happens. There is no annual transfer that happens. So this is adjustment number 2. Now adjustment number 3, it says Mervin company estimates the provision for warranties. So let me write here adjustment number 3. Adjustment number 3, provision for warranties. Provision for warranties. Now, Lucky is asking me, sir, is it okay to write short form in exams? Yes, it is okay, provided you write the abbreviation of it at least once. Okay, you write the abbreviation of it at least once. Nandu is asking me to explain adjustment number 1 again, the depreciation of it. So what is there for in adjustment number 1, depreciation? In previous year we incurred 8,000. In current year we incurred 7,500. But we will capitalize only 7,000 because admin overheads we don't capitalize. So this one, borrowing cost we capitalize 1260. So total cost became 16260. Okay, this is what we capitalized on 31st August. Life was 20 years. So from September to December, September, October, November, December, 4 months. So 16260 divided by 20 years for 4 months is 271 is a depreciation. I hope it is clear, Nandu, to you. Coming to adjustment number 3, Mervin company estimates its provision for warranties based on past experience. The provision for current year has not been updated or recognized. The information below has been compiled by the management for the purpose of calculating the required provision at 31st December 20x8. Product A, product B, units sold for product A in the current year is this much. Units sold for product B in the current year is this much. Probability of defect is this much. And if there is a defect, we have to incur this much. Now, so what is the provision required for product A? What is the provision required for product A? Product A, the provision required is 25,000 multiplied by 15% multiplied by 32 is the provision that is required for product A. Now for product B, what is the amount of provision required? 11 lakhs multiplied by 30% multiplied by $18. Okay. Now what is the amount? It is equals to Sadavrat, sorry if I'm not able to spell your name correctly. Sadavrat, so I will explain this query towards the end. Let me complete the entire question first of all, and then I will come to this query. Okay. But these figures are absolute figures. Okay, so we need to convert them to thousands. So I'm dividing it by 1,000. I'm dividing it by thousands. Okay, to convert these figures into thousands, I'm dividing it by thousands. Now, so what is the provision at 31 December x8 is how much? Is equals to this plus this is 6060. Is 6060. So this is the closing provision. Now what is the provision at 1 January 20x8? The opening provision is how much? Just see in the trial balance, what is the opening provision? What is the opening provision of warranty? 5,000. So it is 5,000. So what is the provision required to be made? What is the provision to be made in current year? What is the provision to be made in the current year? It is equals to this minus this, closing minus opening. This is the provision required to be made in the current year. Now, how will we record this? How will we record? So we'll record warranty expense account debit to provision for warranty. To provision for warranty is how much? credit how much? So it will be 1060 1060 1060 1060. So now it will increase your expense by 1060. So what will I do here? So I will write here A3 warranty expense, A3 warranty expense, how much? Minus 1060, minus 1060 is your expense. Okay, now this is your A3 also done. Now coming to adjustment number 4. Now coming to adjustment number 4, already explained in the previous question. Adjustment number 4 is already explained in the previous question. So we have to record a expense of 2620. We have to record a expense of 2620. So right here A4 in decline in the value of inventory, decline in inventory value, decline in inventory value, how much? Minus 2620, minus 2620. So these are the adjustments that you were required to do. Now what is the total sum of it? What is the total sum of it? It is 2909. So this is called your adjusted profit. This is called your adjusted profit. Control just I will insert two lines. Okay, so this is called as adjusted profits. Adjusted profit after considering the note number 1, 2, 3 and 4. This is your adjusted final profit. Adjusted final profit. Is that clear, everyone? Tell me, guys. Is that clear, everyone? Now coming to Sadavrat and Farzin's query. This loan of 18 million was obtained in 20x7 to fund the construction of the factory. It carries an annual rate of interest of 10.5%. The loan was still outstanding at 31st December 20x8. All the interest on the loan has been recorded as an interest expense in the P&L for the period. So understand. One interpretation of it is all the interest on the loan has been recorded as an interest expense in P&L. All the interest, meaning thereby all the interest is 1.89 is for 1 year only. So that's the reason I am making my interpretation that the loan has been taken towards the end of the previous year, that is on 31st December 20x7, 31st December 20x7. But still the question is not saying anything specifically. Then what will I do? I can make any assumption here that the loan was taken at the beginning of the previous year or at the end of the previous year. I can make any assumption. Now I have made an assumption that the loan was taken at the end of the previous year, but Sadavrat's query was, if I assume that loan was taken at the beginning of the previous year, how will it change my answer? So in that case, I will borrowing cost to be capitalized, amount will change. I will also see this borrowing cost to be capitalized. I have included only the amount of 20x8. I've included the amount of 20x8. Okay, I've included that amount only. Now understand why. Understand here. One more point that you need to understand here is, even if you assume that the loan is taken at the beginning of 20x7. Okay, even if you assume that the loan was taken at the beginning of 20x7, ideally this borrowing cost will change. But you know what? In this question, we are not going to change it. Do you know why? Because see, the question reads this line: at December 20x7, the carrying amount of the factory under construction was correctly calculated as this much. Meaning thereby, even if the loan was taken at the beginning of previous year, that borrowing cost would already have been capitalized in this 800,000. Is already capitalized in this 8 million. Are you getting my point, Sadavrat Mittal and Farzin? Are you getting that point? Okay, so irrespective of whether the loan was taken at the beginning of the previous year or at the end of the previous year, it doesn't matter any manner. It doesn't matter to us in any manner. it doesn't matter to us in any manner. Okay, because the previous year loan borrowing cost would have been correctly capitalized here, would have been correctly capitalized in this one. I believe it is very much clear to all of you. Sadavrat Mittal and Farzin, can you please confirm if your query is sorted? Okay, now going further. So this is the correct profit that we have calculated. Now I am going to the next requirement of the question. What is the next requirement? Prepare statement of financial position of Mervin Company at 31st December 20x8. Statement of financial position of Mervin Company at 31st December 20x8. So now we have to prepare statement of financial position. So let us calculate that. So right here, statement of financial position, okay, us at 31 December 20x8. Oh. So now property, plant, equipment, current assets, I will write how much. See, PPE we sorted. Factory cost will get subsumed with PPE. Share capital will be forming part of equity. So I will write here equity. And under equity, I will write here what? Share capital. I will write share capital. Then revaluation reserve. Revaluation reserve. Then retained earnings. Then okay, done. Draft P&L, draft profit will be there with retained earnings. Provision for warranties will be there in the liabilities. So non-current liabilities. Non-current liabilities. Under non-current liabilities will be, you can write here a provision for warranty. What is the warranty period? If is it given in the question? So using the warranty period, we can say that it is non-current or current, not given in the question. Okay, ठीक है, fine. I will write in non-current. Dividend paid will be adjusted with retained earnings. Current tax payable will be current liability. Current liability. Under current liability, I will write current tax payable. Current tax payable. Inventories is there in the current assets. Cash is there in the current assets. Loan will come as part of non-current liability. Loans will come as part of non-current liability. Then trade payables will come as part of current liability. Trade payables. So I have drawn the pro forma now. So what I will do? What will I do now? I will write the final figures. I will write the final figures now. Okay. Now PPE. PPE. So what is the value of PPE? 36,000. So what will you write? So you will write here 36,000 is the value given, plus what is the value of the factory? What is the value of the factory after depreciation and everything? After depreciation and everything, 15989. 15989. So right here, plus 15989. 15989. Okay. So right here, A1. 15989 A1. Okay. So this is done. We will calculate total figures. Final figure will be written, right here, but towards the end, not now. Final figures will write towards the end, not now. Okay. Then Inventory, is there any adjustment to inventory? Yes, yes, yes. Inventory is how much? 8620 minus 2620 A4 trade receivable 11020. Is there any adjustment to trade receivable? No. So it will come directly as 11020 directly, no adjustment. Cash, is there any adjustment? No. So directly let's write here 33030. Now, equity share capital, is there any adjustment to share capital? No. So directly write 10,000. Revaluation reserve, is there any adjustment? Yes. This 1600 revaluation reserve, it will get eliminated. So 1600 was the amount. Okay, minus 1600 A2 impairment loss, fully adjustable. Okay, now after that, retained earnings. What is the value of retained earnings? 55740. Now plus you will write the profit. What is the profit? Let's see here. What is the final profit? 2909. 2909 is the final profit. Right here 2909. Requirement B. Okay, then minus dividend. What is the amount of dividend? 7240 minus 7240 dividend. Okay, anything else? We'll see. Okay, so draft profit is also done, retained earnings is also done, sorted. Now provision for warranty. So this figure is how much? 5000. So plus 1060 A3, adjustment number 3. Loans is how much? 19890. So is there any adjustment for loan? 19890. No adjustment. So it will be 19890. Okay, now trade payable is how much? 3880. Trade payable is how much? 3880. Any adjustment? No. Current tax payable is 2800. Now, can you please finalize it and tell me the final figures? Come on, guys, tell me. What is the final figure? Let me see the question also directly from here. Okay. Now, I do have the question directly from here and I can tell you the answers also now. Come on, guys, tell me. What is the final figure of property, plant, equipment? It is 36,000 plus 36,000 plus 15989. It is equals to 51989. Tell me, is that clear, everyone? There is some mistake. Guys, this 15989, don't you think it includes this 8,000 also, which was the carrying amount of the previous year? Alright? Tell me yes or no. This 15989 is the entire amount incurred in the current year? No. So this is a mistake which we can make in the exam. So what can we do for this? So right here, plus A1. So right here, in the bracket you write, what is the cost we have incurred in the current year? 5,000 plus 2,000 plus 1260 of the borrowing costs minus 271 of the finance depreciation. Yes, very good, Sadavrat Mittal. Very good. I wanted you guys to identify that, but no one told me, so I have to rectify it myself. So now tell me, what is the amount? 5,000 plus 2,000 plus 1260 minus 271 plus 36,000. 43989. Okay, now inventory is how much? 8620 minus 8620 minus 2620 is 6,000. Trade receivable is 11020. This is 33030. Okay. Now, so what is the total assets? If I have to do the total sum, total. This is 94039. So let me format it a little bit. I believe it is clear. Now, revaluation reserve will become 0. Okay. Now, retained earnings. What is the change? 55740 plus profit of 2909 minus dividend of 7240. Is it clear, or we have to do any other adjustment also to retain earnings? Tell me, guys. Are we required to do any other adjustment? Tell me. No, sorted. So this is also done. Now non-current liability will become how much? 6060. Okay, this is 19890. Current, this is also done. So let us do the total sum. Sum. Equity capital. Oh, sorry, my bad. So, 94039. 94039. Sadavarth Mittal is telling retained earning में Bisma draft profit added. Yes, so now understand, Sadavrat Mittal. So what we have taken, it's not added. So we have calculated the profit as this much, draft profit. So we rectified and calculated the final profit as this much. Okay, so this is the profit that they have calculated. Now we have done only the adjustments. We have done only the adjustments and we arrived at the final profit, and then we added the final profit here. Okay, we added the final profit here. Okay, is that clear, Sadavrat Mittal? So now see, is my SOFP tallying 94039? 94039, it is my SOFP is tallying now. My SOFP is tallying now. I believe it is very much clear to all of you. I believe it is very much clear to all of you now. So now, Ruchi, you were asking me, that sir, what is the relevance of one adjustment and two adjustments, right? So I told in the very beginning that the items which are there in the trial balance will be adjusted once, but the items which are there in the adjustments will be adjusted twice, right? So now see, these items which are there in the trial balance, I have posted it directly in the SOFP. Tell me yes or no, Ruchi. Did I do anything else about these ones? Did I do anything else about these things? No, I just took it to SOFP. But these adjustments, I first of all took it in here in the profits. First of all, I took it in the profits, and then I am taking it up here, and then I am taking it up again here. So it is adjusted twice. It is adjusted twice, right? Now, are you able to link that? Okay, very good. So this is adjustment requirement number, question number 1 for this one. Okay, now I am moving on to the another question now, which is from the interpretation. But before I move on to this question, tell me if you have any queries in the first question which we have discussed for today. If you have any queries in the first question that we have discussed today, do let me know. If you have any queries in the first question that we have discussed today, do let me know. Can we give reference to C requirement from the adjustments I have done in B requirements in exam? Yes, in Victus we can do the same, because it's a part. It's different part of the same question. It's a different part of the same question. Okay, it's a different part of the same question. So within same question, yes, we can give the references to it. So Ruchi, what I was trying to say is, understand, for all these adjustments, I have adjusted in this 2909 one time. Tell me yes or no. For all the adjustments, I have adjusted in calculating 2909, and then I adjusted everything here also. See, I adjusted everything here also again. So it is adjusted twice. But what are the trial balance items? I adjusted them once only. Okay, so everything which got adjusted to 2909 will be adjusted again here. See, 1600, 1260, 271, 2620, 1060. Everything is getting adjusted again. Okay, here in SOFP. But whatever are the trial balance items comes here only once. Now, done with part first question. Moving on to the second question. Which is from the interpretation. So in the yesterday's session we discussed September 23 question paper, and therein we discussed the group interpretation. Right there it was a disposal of subsidiary. Now here it is acquisition of subsidiary. So students who have attended yesterday's class will relate to it, that in yesterday's session we discussed interpretation of the group fs interpretation of the group fs in case of disposal of subsidiary. Now here today I am discussing interpretation of the group fs in the case of acquisition of subsidiary. Okay, now understand. Byte company, a prominent food manufacturing company specializing in pre-packaged meals, purchased an 80% shareholding in Munch company. See, this is the introductory paragraph. So how will I go ahead? So first of all, I will read the introductory paragraph. I will see what all things are given. Just I will run through it, and then, but I will not read the depth of it. No. So what I will do, I will first of all read the requirement paragraph. I will just run through the case scenario, not read, just run through it, read the requirements, and after reading the requirements, I will come to the exhibits, this scenario, and read according to the requirement, according to the need of the requirement. I will read the scenario and answer the questions that comes. I believe you are understanding my point. Okay, now, so what is the introductory paragraph? Byte company, a prominent food manufacturing company specializing in pre-packaged meals, purchased an 80% shareholding in Munch company on 1st January 2008. Munch company, its sole subsidiary, focuses exclusively on organic pre-packaged meals. Understand? Byte company is a food company. Okay, it is a food company which sells pre-packaged foods. It acquires a subsidiary, Munch company. That Munch company also sells pre-packaged foods, but Munch company sells organic foods. Okay, organic, exclusively organic foods only. This acquisition was strategic, reflecting the growing consumer demand for food from the organic source. This is called as a business minded person. Okay, so it seems that Byte company, the CEO of the Byte company is a business minded person. He can foresee the future. He can see that, okay, so far the consumers were preferring pre-packaged foods, but now the consumers are becoming more health conscious. Okay, as the time is passing by, the consumers are becoming more health conscious, and they want organic foods now. Okay, so seeing the growing demand of organic foods, it acquired a company, Munch company, which is exclusively in the organic food department. Okay, extracts from the Byte company's group console FS for the year end 31st December 2008 and to year end 31st December 2007 is given below. Now understand, when have we acquired the subsidiary? On 1st January 2008, meaning at the beginning of the current year. So understand, previous year it was a single company. Current year beginning it got married. And become double. And it became a double. Okay, it became a group. Okay, at the beginning of the current year, it got married and it became a group now. Okay, so this is case of a acquisition of subsidiary. So understand, in 2007 it was single. In 2008 it became a group. So now comparing the single with the group, and we have to interpret whether the acquisition of Munch company was a good decision or not. This is what we have to comment upon it. Okay, Now, tell me now, shall I go and read the entire scenario now? No, I will not. But yes, I will definitely see what is given. So statement of P&L is given, the extracts of it, that is the revenue, the gross profit, the operating profit. A very irrelevant question, Mr. Invictus. Okay. Don't you want me to be happy? See, I am very happy. See, I am very happy. Okay, statement of financial position extracts. Okay, now statement of financial position extracts. So previous year and current year. Now, and then there are certain adjustments given, 1, 2, 3, 4, 5. 5 adjustments are given. Now, this is the requirement now. Requirement number A, B, and C. Requirement number A, B, and C. Now, we need to explain according to the need of the requirement. So, requirement number A says what? Good. Now, explain how the contingent liability of Munch Company should be accounted for by the Byte Group on 1st January 20x8. 20x8. Now, contingent liability of Munch Company. So let's see what is the adjustment pertaining to contingent liability, contingent liability, contingent liability. Here it is, contingent liability. So let us read this paragraph. On 1st January 20x8, the carrying amount of all the, where is my chuha? Okay. The carrying amount of all of the Munch Company assets and liabilities were equal to the fair values. The company had disclosed a contingent liability. Munch Company had disclosed a contingent liability relating to the ongoing litigation concerning a food poisoning case in its financial statements for the year ended 31st December 2007. This has been had an estimated fair value of 250,000 on 1st January 2008. On 1st October 2008, the case was settled at an amount of 310,000. Now, understand. So, what I will write here? What I will write here? As per the provisions of IAS 37 on provisions, okay, provisions, contingent liabilities and contingent assets, as per the provisions of IAS 37. Okay, now entity should disclose all the contingent liabilities. So disclose all the contingent liabilities. Contingent liabilities are not recognized. What is the meaning of litigation? A legal case going on. Litigation means a legal case going on. So basically, I sold food to a customer and that food caused food poisoning to the customer, and the customer has started a legal case against the company. Okay, customer has started a legal case against the company, though it is highly probable that customer will not win the case. Okay, and hence, but still, it is not probable that customer will win the case. Okay, and it is probable that we will win the case. So there is no obligation, but still we if there is a contingent liability, it is a contingent liability. It is a contingent liability which the Munch Company has already evaluated in the separate FS, and disclosed as contingent liability. So in the separate FS of Munch Company, it will be a contingent liability which will be disclosed. It will be disclosed in the notes to accounts. Contingent liabilities are not recognized. Now, but when, so what is the marks? What, for how many marks? 3 marks. Okay, fine. So point number 1, second point. However, when what is the name of this company? Byte, right? Byte. However, when Byte company acquires Munch Company, acquires Munch, okay, on 1st January 20x8, on 20x8, then on acquisition, on acquisition, all the contingent liabilities of Munch company, all the contingent liability of Munch company, which was a present obligation, but the outflow of which was not probable, and the amount can be estimated, shall be recognized in the group financial statements, of Byte Group at its fair value on date of acquisition, that is dollar how much, what is the fair value on date of acquisition? This had an estimated fair value of 250,000. Okay, $250,000. Now this recognition of contingent liabilities, this recognition of provision for contingent liability in group FS will decrease net assets of Munch, thereby increasing goodwill. Tell me, is that clear? So since it was for 3 marks, I wrote 3 points. Tell me, is that clear, everyone? Come on, guys, please confirm if it is clear to everyone till here. Is it clear to everyone till here? Okay, now moving on to the next part. Requirement number B, calculation of ratios. Requirement number B, calculation of ratios. So what are the ratios that we have to calculate? So we have to calculate 3 ratios: gross profit, operating profit, and return on capital employed. Table, ratio formula 20x8, 20x7. Okay, 1, 2, 3. So let me write here ratios, that is gross profit margin, operating profit margin, now return, or I write a simple ROCE. Okay, now formula 20x formula, I write in short, now 20x8, then 20x7. Okay, what is the formula? So this formula for this is gross profit by revenue. The formula for this one is operating profit by revenue. The formula for this one is operating profit divided by equity plus loan notes plus borrowings. Equity plus borrowings, that is capital employed. Now what is the for 20x8? What is the amount? Is equals to how much? Gross profit is 60,000. 60,000 divided by what is the revenue? 220,000 is equals to how much? You have to calculate it. Now similarly for 20x7 is how much? 51991 divided by how much? 160,000 is equals to how much? So can you please calculate ratios and tell me operating profit is 25,000 divided by how much? 220,000 is equals to how much? Now here it is 31746 divided by 160,000 is equals to how much? Now ROC will be equals to 25,000 divided by what is the equity? What is the equity? Equity is 117,929 plus 8,000 is equals to, now this one will be equals to 31746 divided by 95679 plus 3000 is equals to. So now let me calculate what are the ratios first of all. So 60,000 divided by 220,000 is 27.3%. 27.3%. Then 25,000 divided by 220,000 is 11.4%. Now ROCE is how much? 117,929 plus 8,000 divided equals to multiplied by 25,000 is into 100 is 19.85%. 19.8%, not 29, 19.8%. Okay, now this will be equals to 51991 divided by 160,000 is equals to 32.5%. Now this one is equals to 31746 divided by 160,000 is 19.8%. How is it? Anything written? 19.8%. Now 95679 plus 3000 divided equals to into 31746 into 100 is 32.2%. Tell me, the calculation of ratios is clear. See how I have given the calculation, the formula, the calculation, the ultimate answer, how I have given here, right? And this is the way which you are also expected. Examiner will also expect the same from you. The examiner will also expect the same from you. See, in a beautiful presented manner, in a beautifully presented manner, we have given it, right? So this is how you have to give in the exam also. Now, third part is comment on the performance. So let me copy that, copy the requirement and paste it here. Copy the requirement and paste it here. Sir, why do you copy the requirement and paste in the answer? Because it makes my answer clearly distinct from different answers. It makes my answer clearly distinct from different answers. Okay. Now we have to comment on the performance. Understand? You have to comment on the performance. Am I required to comment on the position? No. Only the performance. Only the performance. So what all things I will be commenting upon? First of all, I will be commenting upon revenue. Second, I will be commenting upon gross profit. Third, I will be commenting upon operating profit. Okay, I will be commenting upon operating profit. Then I will be commenting upon return on capital employed. I will be commenting upon return on capital employed. So these are the four things I will be commenting upon, and then I will give my conclusion. I will give my conclusion and I will wrap up my answer. So this is what we have to do. Tell me, are you understanding this part? Okay, students are saying, sir, please explain the second paragraph. This paragraph they are asking me to explain. So understand, if the subsidiary company has recognized a contingent liability, if the subsidiary company has recognized a contingent liability, okay, then the parent company recognizes the provision for the same. Okay, see, if there is a contingent liability, in the SFS of the subsidiary company, we will not recognize, we'll just disclose. But when the parent company acquires the subsidiary, parent company recognizes a provision on the contingent liability. Parent company recognizes a provision on the contingent liability. Okay. Now, there are three things which has to be satisfied to recognize a provision. It should be a present obligation. There should be a present obligation. The outflow should not be probable. These two means contingent liability. Okay. And the amount has to be estimated. If all the three conditions are satisfied, then the contingent liability disclosed in the notes to accounts of the subsidiary company is recognized as provision by the parent company. Okay. Now let us come to the third part of analysis. The commenting on the performance. So let us comment on the first of all on the revenue. So now tell me, what has happened to revenue? Revenue has increased. Oh wow, wonderful. Revenue has increased. Now, before you start to comment, now is the right time that we need to read all the working notes, all the remaining case scenario. Before you start to comment, don't start commenting without reading the full scenario. Start to comment without reading the full scenario. Okay, so now we will read the entire scenario. On 1st January 20x8, the carrying amount of all of the Munch company's assets and liabilities were equal to the fair values. Company had disclosed a contingent liability related to the ongoing litigation concerning a food poisoning case in the financial statements for the year ended 31st December 2007. This had an estimated fair value of itna on date of acquisition. On 1st October 2008, the case was settled for 250,000. So the outcome of this is this one. So during the year, I have paid an amount of itna. For settlement of the litigation. Munch company's individual financial statements had a revenue of 50 million. So the individual revenue of Munch company was 50 million. What is the interpretation of it? Understand, in 20x7, was there a Munch company? No. But in 20x8, we do have Munch company. So revenue has increased. So what I'm saying, revenue has increased. Okay. By how much percentage? Tell me by how much percentage? Revenue has increased by how much? What is the amount? Tell me. 40 plus 2, 60,000. Revenue has increased by 60,000 as compared to previous year. Now, out of 60,000, out of $60,000, revenue of $50,000, is attributable to a Munch company. Tell me yes or no. It is attributable to Munch company. So if we remove the impact of acquisition of Munch company, the increase of revenue is $10,000, which is how much percentage? Tell me, which is how much percentage? 10,000 by 160,000 in the previous year, that is 6.25, which is 6% growth. 6% growth as compared to previous year. Still there is an increase as compared to previous year. So this is what I can write as of now. But let us read the scenario, full scenario. Then only I will be able to write everything. Now, Munch company currently focuses exclusively on manufacturing prepared meals. Munch company currently focuses exclusively on manufacturing prepared meals, but it plans to expand its product range in the future to include cold pressed juices, food supplements, baby purees. I don't know what is baby purees, but there are something. Okay, and vegan meals. Okay, vegan meals. Now, this decision comes as the organic food industry has become highly competitive and the new products are expected to be generate higher profit margin to support Munch Company. In 2008 financial year, Munch Company incurred substantial research costs related to the strategy for expanding its product line and invested significantly in the marketing its of existing offerings. To finance these expenses and future costs associated with the expansion, the company has secured a loan. In 2008, Munch Company revalued the factory. Okay, revalued the factory. Okay, fine. And for a number of years, Byte Company has consistently achieved a 10% annual growth in revenue. Oh my God! Now what is happening here? Okay, so I can see in the current year the growth of the revenue is 6%. This is lower. This is lower than past growth rate of revenue by of 10%. Okay, this is lower than the past growth rate. This is lower than the cost growth rate. This might be due to the reason. This might be due to the fact that consumers are more focusing or more preferring organic foods in recent years and in the years to come acquisition of Munch Company seems to be a good decision from this perspective. Now tell me why? Because there is a shift of the consumers' preferences. Tell me, is that clear? Is that clear about revenue? Is that clear about revenue? Tell me, guys, come on. Is that clear about revenue? Okay. Now we will move on to gross profit now. Gross profit. So now let's see what has happened to gross profit. Gross profit has decreased from 32.5 to 27.3. Gross profit has decreased. Gross profit margin has decreased as compared to previous year. Can you tell me the reason why? Can you tell me the reason why the gross profit has decreased as compared to previous year? Come on, guys, tell me. Why the gross profit has decreased during the current year? Why the gross profit has decreased during the current year? Okay. Now, this could possibly be due to following reasons. Okay. Now, so the possible reasons of decrease of the gross profit is, now we are speculating a little bit. Okay. Litigation paid. Okay, now tell me, litigation expense that we pay, is that a cost of sales? Gross profit means what? Revenue minus cost of sales is your gross profit. Revenue minus cost of sales is your gross profit. Okay. So litigation amount that we pay, is that a cost of sales? No, right? It's an operating expense, we can say, but it is not a cost of sales. It is not cost of sales. Diksha is asking, how did we achieve 6%? So tell me, if we remove the element of 50,000, what is the growth of revenue? From 160,000 to 170,000. So 170,000 minus 160,000, that is 10,000. So 10,000 divided by 160,000 is 6%. Okay. Growth of 10,000 divided by the revenue of previous year is 6,000. So I will write here, if you want me to write the formula, it is 10,000 divided by 160,000. Okay. So now, what could be the possible reason? Might be lower gross profit margin of Munch company. Might be the case. Might be the case that there is a lower gross profit margin of Munch company. Okay. Why lower gross profit margin? As we can see, see here, Munch company currently focuses on manufacturing prepared meals, but it plans to expand its proper product range in the future to include cold pressed juice. This decision comes as the organic food industry has become highly competitive. Highly competitive. Now understand why. Okay, as Munch company is into highly competitive industry. Highly competitive industry, which forces the entities to reduce the prices, and ultimately decreasing margins. Right? Come on, guys, tell me. Q2. Okay. Now, but understand see, this is the gross profit is decreasing, though the gross profit might be decreasing in the current year. But the best part is Munch company is prepared for it. So I'll write here, even though the gross profit margin is decreasing in current year, Munch company is prepared for it, by planning to launch new products which will have high margins. See from where I got this here. See here. This decision comes from the organic food industry has become highly competitive, and the new products are expected to generate higher profit margins to Munch company. Right? So they are prepared for it by planning to launch new products which will have higher margins, profit margins. Right? So that's the best part. See, if your profitability is decreasing in the current year, that's not a challenge. But if it continues to decrease in the future also, that's a challenge. So if you can see a risk coming in, that's not a challenge. If you are not working towards that risk, that's a challenge. Okay. So now the Munch company is prepared to take up the challenge. Okay, so that's the best part of Munch company. So again, Munch company has proved to be a good investment decision, good acquisition decision. Okay, now further understand one more point. We see that Munch company revalue its factory. Now further, Munch company, Munch has adopted revaluation model in current year, right? No, adopted revaluation model, not current year. Okay, adopted revaluation model, which will further increase the value of assets, increase the value of non-current assets, thereby increasing depreciation costs. And tell me, where do we recognize depreciation? As part of cost of sales, right? Increasing depreciation and hence increasing cost of sales, which in turn decreases gross profit margin. Gross profit margins. Okay, so this is what we can write about gross profit margin. This is what we can write about gross profit margin. I believe it is very much clear to all of you. Now I am starting to comment on operating profit. I'm starting to comment on operating profit. Operating profit. So, but the principal and parent and subsidiary should follow the same accounting policies. Yes, they should follow the same accounting policy. So, where is the difference here? So, how does it make the difference? Parent and subsidiary should follow same accounting policy. I totally agree. So, how does this make the difference? So, it's right written here. No, all other. In 1 January 2008, Munch company revalued its sole factory, just factory. All other categories of property, plant and equipment at Byte company are measured at cost model. So they are following, see, Munch company follows the same accounting policies as Byte and company, Byte company for property, plant and equipment. So it is written, no. That's what we are following, Sadavrat. Okay. Now coming to operating profit. So what is happening to operating profit? Tell me. Operating profit is decreasing from 19.8 to 11.4. So you have to write operating profit is decreasing as compared to previous year. One of the reason for the decrease is decreasing gross profit margin. Decreasing gross profit margin. Decreasing gross profit margin. Now, what are the other reasons? What are the other reasons? Okay, Siddhi Rastogi is asking how increase in depreciation will increase cost of sales. Siddhi, tell me, where do we recognize depreciation in P&L? Where do we recognize depreciation in P&L? Tell me. Cost of sales, right? We add depreciation in cost of sales, right, Siddhi? So it will increase my cost of sales and it will ultimately decrease my profitability, the gross profit. Okay. Sadavrat, see, it says all other categories of PPE are measured at cost model, not factory. All other. And the question clearly says Munch follows the same policies as Byte company for property, plant, equipment. They are not different. They are at the same level. They are following the same policy. Okay. So one of the reason of decreasing gross operating profit margin is the decreasing gross profit margin. Decreasing gross profit margin. But we now need to investigate into what are the other reasons. What are the other reasons? So one of the reason definitely is the case litigation. Okay. Further, operating profit would have decreased in current year due to following reasons. What are the reasons? It can be settlement, litigation, expense in current year, which is a one-off item, which is a one-off expense. One-off expense means, or you can write non-recurring nature. It is non-recurring nature. Very good, Sadavrat Mittal. Very good. Very good. Another reason can be investment. Okay. You can write here research expenditure incurred by Munch to for launch of new products to increase future profitability Okay, now this can also be one of the reason, right? To finance these expenses, future costs associated with the expansion, the company, okay, secured a loan significantly. Okay, further it can be, okay, it can be also the another reason can be increase in the marketing expenses, increase in the marketing expenses, okay, increase in the marketing expenses uh, for its existing offerings, for its existing offerings, right? So this could also be the reasons, this could also be the reasons for increase in the decrease in the operating profit, because all these will increase operating expense, thereby decreasing the operating profit margin, thereby decreasing the operating profit margin. I believe it is clear to all of you. I believe it is clear to all of you till here. Okay, now this is all about ROCE. Now, how many points we have written so far? See, we need to write 14 points. So we have written 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 points we have written so far. 11 points we have written so far. Now we have to write ROCE and the conclusion. 3 more points we need. We need 3 more points. But I will write whatever is possible. Whatever is possible, I will write everything. Now it is upon you what point you want to write in the exam and what point you want to remove in the exam. Now ROCE, what is happening to ROCE? Tell me. What is happening to ROCE? ROCE is decreasing as compared to previous year. ROCE, return on capital employed, is decreasing as compared to previous year. As compared to previous year, one of the apparent reason, apparent means prima facie, direct reason, one of the apparent reason for the same is decreasing operating profit margin, decreasing operating profits, decreasing operating profits. Now, what are the further reasons? What are the further reasons? So now we see that, see, in the previous year there was no revaluation reserve, but in the current year we see a revaluation reserve. Okay. Further we see revaluation of asset done in current year, in current year, which increases the capital employed, and thereby decreasing the ROCE. Okay, now further see what are the further reasons. See the loans taken. Further we see that Munch company has obtained new loans in current year to fund the expansion plans, okay, which increases capital employed, and thereby decreasing ROCE. So we've written 3 points for ROCE also. Can there be any other reason for ROCE? Guys? Tell me, ROCE, can there be any other reason? ROCE is operating profit, we have explained. ROCE means capital employed. Forms equity and liability. So equity is increasing because of the revaluation reserve and borrowings. So we have further explained that part. Now done. So now we have to come to the conclusion. We have to come to the conclusion now. So now in the conclusion, tell me, what shall we write? Here? So in the conclusion, I will write here, ideally acquisition, okay, not ideally, I will write here, in the first instance, it appears that acquisition of Munch company, acquisition of Munch company decreases the profitability of the group. However, we see that Munch company is aware of its risk and is already planning to launch new products to meet the shift in consumer, to meet the to meet the consumer demands, and increase profit margins, hence acquisition of Munch was a good strategic move by Byte company. Done. So this is what you have to write in the exam. This is how you have to write in the exam. So how many points you can see here? For 14 marks, 1 point, 2 point, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, and 15 marks. 15 points for 14 marks. That clearly makes sense. That really makes sense. So now tell me, is that clear, everyone? Is that clear, everyone? I believe we have discussed the entire question paper in depth, and the entire section C of the question paper in depth. Okay, still if you have any queries either in these questions or section A or section B, you can write down in the comment box, or you can connect with me over WhatsApp. You can note down my WhatsApp number. I will make a note here, so you can reach out to me over WhatsApp as well. So my WhatsApp number is +91 8584 12637. Okay, you can reach out to me on this contact number, and definitely we can discuss and resolve your queries as per my availability. Okay, so that's all for today. Thank you guys. Bye bye.